Good afternoon, everyone. I'm back in this thing again. Let's swing it out the park. So I had to redo this video because in my last video, it came out, didn't come out too good. So in my last video, in the series, I talked about the top five consumer staple stocks. Typically, people buy consumer staple stocks in times like this, and sometimes of the market when the market is of uncertainty. When you have a recession, when you have red days, people want to find stocks to figure out where they want to park their money into to survive the market. Today, that's not the case. Today is we're going to look into the future where you just got a raise, you just got a bonus, or you got some extra money into your pocket and you want to splurge a little bit. That's the consumer discretionary sector. So whether it's you want to spend a couple $100s, a couple thousand, or just $25, I got the stocks that you need for the consumer discretionary sector. But first, I know you're asking, Kader, you told me about the consumer staples, but what is actually a consumer discretionary? Basically, consumer discretionary is when you have extra money to spend and you want to splurge. So typically in the consumer discretionary sector, you have furniture, appliances, electronics, luxury goods, apparel, retailers like Home Depot, Lowe's. You have uh, you have hotels. You have casinos, gambling, resorts, cruises, restaurants, Steak 48, McDonald's, Whataburger. If you're in Houston or Dallas or Austin, woo woo, Whataburger, right? And if you know me, I like the wings because I'm your wing man. So Buffalo Wild Wings or Wingstop, because chicken wings and eggs, so it's a lot high right now. It's very high right now. So right here it shows the best consumer discretionary stocks for you to look into for 2023. One is Nike, two Starbucks, McDonald's, TJ Maxx, and Disney. Nike needs no introduction. Basically, it's the competitors of Adidas, and I want to say can't think of any other uh, shoe company. But when I think of Nike, I think of Michael Jordan. Jordan's growing up in the black community is very pivotal. Everybody want to be like Jordan, or when Kobe was alive to get the Kobe's, or get LeBron shoes, or even think about way back in the day, Allen Iversons. Allen Iversons and the T Max were really big, and so Nike overall just apparel through just the different sports and the different athletes. All I can think about is Powerade, Gatorade, and then a Nike commercial. That's all I can think about. The next, I would say, consumer discretionary is Starbucks, and Starbucks, I'm not really an avid coffee drinker like that, but when I do travel globally, when I go to Amsterdam, London, Italy, whatnot, when I'm at the airport, I find myself getting sucked into buying a venti or buying a grande, and for the most part, I love seeing long lines at Starbucks, whether either in person or through drive-throughs, because by me being a shareholder, I know that I'm going to get a piece of that pie through my dividend income and my dividend increases, and I love that. The third consumer discretionary stock is McDonald's. Uh, the McDonald's, the Golden Arches, its its brand is very. I want to say it's top tier. Where whether I've been to Amsterdam, where their burgers were extremely healthy, to uh, when I was in Spain, or even I was just in California. It's each sector where I'm living in the South now, so they have different promotions to compare to when you on the West Coast, or you compare to certain regions where they have different promotions or how they do their burgers or make rib or whatnot. And most people when they think of McDonald's, they think of fast food. But me as an investor, I think of real estate because of franchises, them open up stores and giving giving more of the power to the people who want to open up the franchises. So McDonald's is really big for brand recognition. Four is TJ Maxx. Five, I was is a big company, which is uh, Walt Disney. Walt Disney. has many different brands under different names. So you have Disneyland, Disney World, the Disney Princesses, Marvel. Since I love watching sports, whether it's basketball, soccer, football. You have ESPN. Uh, Growing up, my dad used to take me to the movies all the time, so I used to go see Star Wars all the time, and Pixar, and then also ABC. It's owned by Walt Disney. So uh, next, we're going to talk about 5 dividend stocks for you to look into the stock price and just more of the metrics, so you know what you're getting yourself into. So the stock number one needs no introduction, as I say. This is one like in my opinion, and my opinion it varies from consumer to consumer, but I would say the number one consumer discretionary dividend stock. I would say number one consumer discretionary stock is Tesla, but dividend stock paying stock I would say is Starbucks because the outside of McDonald's, its brand name is so strong from the Americas, the Western Hemisphere, Eastern Hemisphere, whether you're in Vietnam, Thailand, Singapore, you're gonna see that cup with the emblem for Starbucks. Starbucks costs $106 per share. On certain days, you can get it as low as $100. Uh, when the Fed speaks, sometimes you can even get it under $100, and that's where it's best try to get it under $100. It grows its dividend roughly 7 to 8% these last couple of years, but before the pandemic, it was increasing its dividend like over 10%, which is great. I love this dividend stock. I invest in this dividend stock, and if you like it, take a look into it and get some Starbucks in your portfolio. The next stock is McDonald's. McDonald's is roughly $271 per share. I know it's a little bit much, but sometimes you can get it with like big market news, negative news days, you can sometimes get it for under 250, $230 per share. And I buy McDonald's and I love this in my portfolio because to me it's a steady eddy because even though consumer discretionary stocks are stocks where you have like extra cash flow or extra money in your wallet, you're not spending hundreds of dollars. A lot of times when you have little kids, they want Happy Meals. You buy McDonald's, buy a nice burger, or for me, a nice little 10-piece chicken nugget meal with the sweet and sour sauce, wonderful fries. So I don't make a habit, but it's a nice little pick me up after a long week, long stressful work week. So it's a great dividend stock. It has brand recognition, so why not? This stock I put it into this video because I know a lot of people are not really familiarized with Tractor Supply. But when we experienced a great resignation and a lot of people, workers, decided to either move from the city to out into the rural areas, the country areas, especially in 2020, going into 2021, a lot of people that uh, decided to either work remote or decided that they didn't want to go back to work at all. So a lot of people they decided to move into the country, and so in the country, yeah, you may have a Walmart or a grocery store here and there, but you don't have many options for like to buy like dog food and so Tractor Supply it's like a retailer for inside of well outside of the agriculture or around in the rural area. So that I would say this stock is very intriguing because it has a high beta. It grows like when I bought it and it grows a lot. It grows fast. And then if you look at the dividend, it increases dividend in 2022 77%. Now I don't foresee it growing to 77% in 2023. I would say that anything over 10% is great, and it costs $212 per share. Another darling in the consumer discretionary is Target. A lot of people talk about. The reason why I put this in here is because it tends to increase its dividend for over 15%. It has a 2.64% dividend yield, which is unheard of because when I was trying to buy this stock 2 or 3 years ago, it was at like $250 because this is a dividend aristocrat, and as you see right here, its dividend safety score is 90. uh, it increases dividend high. It put high returns into either your dividend portfolio or your investment portfolio. It's like a grade A stock, like for real. And its competitor is Walmart. And a lot of times, either when you go buy stuff, you're gonna go to Walmart, or if flip a coin, you go to Target. It's like flip. It's like we got a coin, heads or tails. If heads is Walmart, then tails is Target. And so, uh, this I'm thinking about putting Target into my Roth IRA, but I'm thinking about it. The last stock, which means a lot to me, because growing up in the inner city, the urban, growing up, Nike, Michael Jordan, Jordan shoes is just really big. And so, like I told you the story earlier, that the Nike really, it leaves an imprint on you through either the commercials or through athletes. And for me, I just want to promote for people to be shareholders and own Nike instead of just owning just the shoes. You could buy the shoes as well, but also be a shareholder, because you know you know that people are going to buy Jordans, and people are going to buy the apparel, and the shorts and the hoodies and whatnot. Become a shareholder and take advantage of the dividend increases, and also the stock increases as well. The stock increases like 15 to 20% on an annual return. That's really good. Imagine putting $1,000 in Nike, and then just coming back 15, 20 years and see how well it's been doing with sports and athletes, because we're gonna always have our sports. So why not? If you enjoyed this video, understanding what is a consumer staple, the different type of stocks in the consumer staple, and the different type of stocks you can look into to add into either your dividend portfolio, or you could add into your dividend portfolio or your investment portfolio for your consumer discretionary, not consumer staple. Uh, be my guest, like and subscribe to my channel. Click the red button, share it amongst the masses, amongst your friends, or if not, you just keep the information to yourself and continue to learn more about tech stocks, industrial stocks, and the different stocks in the different sectors, and uh, open your mind to investing. That's why I'm here, the wingman, to be your wingman, to back you up, to help you in this investing journey. So come follow and join me in this investing journey. All right, guys.